This morning I made $430 on a C grade setup. Like it was just a mid setup, but my entry still presented itself. All the boxes were checked off. And it just didn't give me the quality that I normally look for, right? Like it just wasn't as clean. And that goes with the debate that is trading a science or is it an art? Because normally when you think of science, it's like a formula, right? Like it's pretty static, right? And then you think of art, and art can be displayed in a lot of different views. There might be slight differences, right? Like the same foundation, slight differences, things like that. And in this sense, I think that trading was an art, right? Like the signal was still there, all my boxes were checked, but it just didn't look as clean as it normally does, right? And from there, I graded this setup like a C grade setup. Did I still take it? Absolutely. But I compensated for it. Okay. So, how did I compensate for a lower grade setup? Of course, I sized down and I monitored my own expectations. Like, I just automatically assumed that the money was gone the moment I entered the trade. But before we go into the trade recap, I do want to ask you guys, do you guys think trading is a science or is it an art? Leave your answers in the comment below. So jumping right into the trade. If you've seen my trade recaps, you know I have the same fundamental elementary foundation of my trading system, which is liquidity sweep, entry model, stop loss below the impulse candle, and then a 2R profit target. 4 steps. That's it. I do the same shit every single day. And I have been on a 6-day winning streak doing the same thing every single day. And if you would like to see my markups, follow me on Instagram at Lawrence the Investor. Okay, link is also in my bio. So looking at the trade recap, obviously I marked my London lows and London highs, and this is where I start to look for the sweep. I can also find the sweep at the break of the opening range as well, but whatever comes first is what works. So we got this London low, we got this sweep at the London low, and then we got this big push up, right? Like a V-shaped reversal pretty much. We go back to the top of the range. My entry model, which is very mid, right? Like C grade, bad quality, happens, right? Like, so this is a double bottom. This should look like pretty much like the perfect W or close to like a perfect W, right? So it should look something like this. If I can find my, what am I doing here? Here we go. So it should look something like this. Boom, 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 boom. And then I will enter right here at the break of this neckline. Boom. And I'll mark that blue. Okay. And I'll break right there. I'll enter on that break going long. So my profit target is going to be a 2R from that break, which is right here, which so happens to be the opening range as well. So my profit target is a 2R, and then my stop loss is going to be below the nearest impulse candle. So if I take this away real quick, you'll see that we got this long wick that surpassed this candle right here. So the nearest impulse candle would be this candle right here. That's the nearest impulse candle before my entry model. Below this should be my stop loss. That's normally where I set my stop losses. But considering that I entered right at the break of the opening range, and then we have all of this risk, that's a lot of risk. And I have 2 options here, right? And the 2 options is set the stop loss below my entry model where it could possibly get swept. Not likely because the sweep already occurred earlier, but it's still possible. Or I size down, right? And then I put my stop loss at the proper stop loss. So for me, I normally ease my way into my trades. I entered with 2 micro NQ contracts, only 2. If I would have put my stop loss at the bottom of this impulse candle, I would have been risking $328. And I think that's quite a lot for only 2 micro and Q contracts, right? So I was like, you know what? It is what it is. My entry model is kind of mid. The stop loss is all the way down here. I'm not going to risk $320 on this trade. So I placed my stop loss at the bottom of my entry model. And if it was going to go, it was going to go. And if it didn't, then it didn't. So as you can see, I'm grab my long position. We entered right there. Put my stop loss at the bottom of the entry model, and then went for a 2R. Sorry. Entry was like right there. Went for a 2R, like around right here. Okay. Like around right there. So we made it to my 2R, we made it to my profit target. And the thing here is, I think the biggest key piece here is that I actually accepted that I did have an improper stop loss relative to my plan. And if I would have got stopped out, then I just would have got stopped out because it was just a mid entry model. Like the entry model just wasn't that good. And my natural or my proper stop loss was too far away, and that was too much risk for me. So it's okay to modify your system or your setup as long as you accept it. Like you accept the risk, you accept these changes, because whatever happens next, then you're gonna have to deal with that. So if it ends up being a loss, the loss isn't the problem. It's what do you do after you incur that loss? Did you fully accept the outcome prior to entering the trade? And a good question to ask yourself is always, how much am I willing to lose to figure out if this trade is going to work? And I was not willing to lose 320. My stop loss right here was around $130. I was willing to lose $130 for this mid-ass setup. But I still had to respect it and allow probabilities to play out. And it did, right? Even though it was a mid quality in my eyes, it still ended up working out. You see my profit target was a 2R, very close to London highs. I scaled out 3 out of 4 contracts. I normally go in with 5 contracts, but I eased into it with 2 contracts, and then I doubled and added my position where we made it 50% to my profit target. So I'm 4 contracts in, halfway towards my profit target. I sold 3 out of 4 once we hit profit target, and then I looked at the ES chart and I saw that we had a little bit of space. So I left 1 contract. I got this final impulse, this nice little impulse, and then I sold the remaining of my position, granting me $430 on the day. So the main takeaways here is, make sure you accept whatever adjustments that you make. Make sure you accept your risk. How much are you willing to lose to figure out if this trade is going to win, and make the proper adjustments, set the proper expectations, and yeah, take it from there. I hope this video gave you some good insight on how to manage like average or below average trades. Just make sure you compensate by lowering your risk and setting proper expectations and accept whatever the outcome is. And if you're not willing to accept the outcome, you don't have to put on the trade. And I'll see you on the next one.